I'm Matt Bishar with NAREIT.com here in Phoenix, Arizona for REITWise 2015, NAREIT's Law, Accounting, and Finance Conference. I'm joined today by Mark Decker, Jr., Group Head of U.S. Real Estate with BMO Capital Markets. Mark, thanks so much for joining us.
Thanks for having me.
Now, we just passed the quarter poll for 2015. How would you describe the state of the real estate capital markets?
I think the markets are in great shape. There's a lot of access to all the markets. I think REITs, public real estate companies, currently enjoy the best access to capital of any other real estate capital formation. So equity markets are there, debt markets are wide open, converts, preferreds. Pick your flavor. There's a lot of good things happening, and so if you've got a good use for the money, there's a lot of investor support.
Now, obviously a lot of attention regarding REIT M&A focused on Simon's bid for Macerich, but what do you expect in regards to future REIT M&A?
Yeah, I think we're going to continue to see a lot of M&A activity. I think it'll be predominantly public buyers of private portfolios. That's been what the balance of activity has been over the last several years. There have been some large public-to-public deals, and I think that'll continue. And that's always going to be about asset fit. It won't be just high multiple versus low multiple. It'll be, transactions that make sense because it's additive to the real estate and helps them grow cash flow over time. So I think we'll see more of that, but I think it'll be predominantly publics buying privates.
Okay. And lastly, where are we in the cycle relative to when you might start to expect to see privatizations, and what would drive those types of transactions?
Yeah, so the other side of the coin we were just talking about is privatizations, and I think what we need to see there, and many of the components exist, is a really robust debt market. And today a privatization for a smaller cap company, call it sub 5 billion, is there. The CMBS market would probably be the financial modus, as opposed to the last wave where it was really a lot of banks stepping up on balance sheet for acquisition finance. I don't see a lot of that happening today, just because of the regulatory environment and where we are. But I think you'll see go privates. There are massive pools of capital. there are less private equity firms today than there were in 2006 on the real estate side, but they're all bigger. So there's more capital today, and the bigger funds require a bigger check size. So that's going to drive a lot of activity. So you could argue whether REITs are expensive or cheap. Certainly, that's a debate we won't settle in this conversation. But to the extent a company looks cheap on a relative basis, or you can drive a higher ROE with more debt, those companies are going to be in play.
Great, Mark. Thank you so much for joining us today.
Super. Thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.